Hello everyone, this is Megha Bhandari and I welcome you all to an insightful session on passive investing brought to you by Nippon India Mutual Fund. Today, we're diving deep into why passive funds are gaining momentum and how Nippon India Mutual Fund has become massive and passive. So joining us today is Mr. Arun Sundaresan, an expert in this space, to offer his invaluable wisdom on ETFs, index funds, and how passive investing may shape your financial future. So let's get started. Welcome, sir. So, sir, massive and passive is across all media channels. Can you tell us why are we claiming so?
Thank you, Megha. Let me respond to that. At Nippon India Mutual Fund, we are fairly large when it comes to the passive space particularly. We manage a total of 48 schemes with total assets under management of 1.65 lakh crores. These schemes are across categories in equity, fixed income, and commodities. We have several advantages. In fact, as far as the ETF space is concerned, we manage in terms of the total volume, almost 55% of the volumes happen in the Nippon India ETF schemes. Along with it, we have also done a lot of pioneering work. We were the first ETF, the Nifty Bees was the first ETF to be launched, and along the way we have done several innovations as well. There are a total of 1.46 crore folios that we manage, which is more than 1/3 of all the folios in the mutual fund industries, and our investors can choose a plethora of funds across different categories to invest into.
So, sir, for our new investors, could you just take us through what passive funds are and how would they find place in their portfolio?
Sure. There are three types of passive funds. One is exchange traded fund or ETF. They trade on the stock exchanges, pretty much how stocks and debentures trade. The second type of passive funds are index funds. They are like mutual fund, but they replicate a particular index. There is no active fund management, so they are also part of the passive category. The third type of passive funds are what are called fund of funds. If there is a fund which invests into an underlying passive, it could be a ETF, so those funds become a fund of fund. So that's also passive funds. These funds come across different types of categories, equity, fixed income, commodities, and within each asset class, like equity, there are various types of products like Nifty, like mid-cap, there are strategy indices, sector, thematic. Likewise, in fixed income, if you want to invest only into government securities funds, there are funds, corporate bonds, various maturities. Likewise, in commodities, gold, silver. So there are a variety of these passive products across these three categories that we talked about.
So, sir, there is a very interesting number in the ad that appears, which is 55% of daily average trading volume. So could you please throw some light on, how important or critical this number is?
Yes. So this is a very important metric when it comes to ETFs, the exchange traded funds. The volumes that happen on a daily basis, a particular fund, the particular ETF, should actively have buyers and sellers on the stock market. Only if that happens, the liquidity being very high, the ETF is likely to trade at closer to the underlying what is called as NAV, the net asset value, which is the intrinsic value of the ETF. If the liquidity is poor, meaning there are not enough buyers and sellers, the ETF will start trading at a very different price, and that price will be paid by the investor as higher spreads. Therefore, this volume data is something which is very important. At Nippon India Mutual Fund, across schemes, in general, while some schemes can be a little less, little more, approximately 55% of all the volumes that happen on the National Stock Exchange and the Bombay Stock Exchange happen in the Nippon ETF schemes.
So, sir, in passives, there is this only replication of the underlying index. So could you throw some light on this feature?
Yes, so passive funds by definition replicate an underlying index in whichever format they are, whether it is in ETF or index fund formats. So there is no element of active fund management. There is no fund manager who decides which stock to buy, when, in what quantity, etc. Whatever is the underlying constituent of the index he or she will simply replicate that particular index. But having said that, passive funds offer a lot of interesting opportunities. There are different types of indices. Broadly, there are 4 of them. One is broad-based indices within equities. For example, all these market cap-based indices like Nifty, mid-cap, large and mid-cap, small-cap, etc. Second, sectoral funds focused on specific sectors like bank, pharmaceuticals, automobile, etc. Third, there are also thematic indices like manufacturing, consumption, defense, and so on and so forth. And the last bit, also called a strategy, in some terms, smart beta indices, which again offer a variety of products. These could be factors such as momentum, alpha, quality, and so on. You can also combine these factors and make it multi-strategy products. There can be a product which involves 2 strategies. It can be applied on different parts of the market. Therefore, the innovation, the kind of differentiated products that are available in the passive space, and within that, what we offer in Nippon, we offer a set of 48 schemes across these categories within equity, fixed income, and commodities. And that's how we reach out to different investors, and that's how they could find value in our funds.
So, sir, what would be your concluding remarks for our viewers, or are there any important pointers that you would want to share with our viewers, which would help them in their future investing?
Passives is an interesting space. There are 2 things particularly I wanted to point out. One is that passive, in a way, is true to label kind of products. For example, if you talk about a mid-cap ETF or a mid-cap index fund, this fund will replicate the mid-cap 150 index, so almost close to 100%, except for some technical reasons. Almost the entire 100% will be replicating mid-cap index. It doesn't get mixed up with large cap, small cap, or cash, or any other parts of the market. So to that extent, you get pure exposure, and that's something very similar when you look at a sector fund or a thematic fund or a strategy fund. So that's something very unique and interesting when it comes to passive funds. The second point is the sheer number of products, the unique offerings, the differentiated offerings are way higher in the passive space today than otherwise. You have a lot of differentiated ideas. So investors would be able to create unique portfolios, very differentiated portfolios, and create very different risk return profile for themselves. So for these 2 reasons particularly, while there are several other advantages as well, I think for these 2 reasons, passives are very interesting, and investors need to look at this very seriously.
Thank you so much, sir, for sharing your valuable insights in the world of passive investing, and for helping us understand what makes Nippon India Mutual Fund massive in passive.
Thank you, Megha.
So if you want to explore more about our passive fund offerings, or take the first step towards building long-term wealth through cost-effective and transparent investments, visit our website today. Until then, stay healthy, keep learning. See you next time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.